Hey, welcome back to the show. This is going to be an amazing episode. Today, you're going to meet Chris Rizik. He is a 2025 Venture Capital Award, Venture Vanguard Award winner, which is an incredible award, Chris, the highest national VC award that's presented by NVCA, which is a really well-respected association for venture capitalists. He's also the founder and managing partner of Renaissance VC. It's a first of its kind fund of funds. He's been an EY Entrepreneur of the Year, Michigan Venture Capital Hall of Fame. I mean, Chris, the list goes on and on and on. But what's really cool is you started your career as a CPA at PricewaterhouseCoopers, which is pretty interesting. And now his fund of fund has invested in 60 funds. That's 800 startups with a dual mandate on strong financial returns and regional economic growth. We're going to talk a little bit about that. But this is your first show. I'm Shane. I'm a ex-founder, AI researcher, top voice in negotiation on LinkedIn, written a couple of books on negotiation, AI, and peacemaking. I'm an investor at B Ventures. We're the world's #1 peace tech venture capital fund. And most importantly, I'm your host. So excited. Chris, welcome to the show. To kick us off, like I mentioned, you've backed 60 plus funds now at this point. What is that one trait that tells you that a GP that has real potential?
Well, first of all, thanks for having me on, Shane. Love what you're doing with the podcast and your whole concept is just great. As we look at funds, we're looking for fund managers that are looking forward. I mean, that are following trends, are looking forward at what's coming next. But also, this is like a marriage when we invest in them. We're going to be joined at the hip for, I mean, it says 10 years, but it's probably more like 15, right? And we're trying to find people who think as we do about the world and believe in our mission, which is democratizing venture capital around the US.
And if someone's never heard what democratizing venture capital means, how would you describe that or define that?
Yeah, I would say it is making venture capital equally available to all deserving people and regions of the country, not charity, but a belief that if markets are working well and there's equal access, that there's the better chance of making stronger returns.
100%. And one of the things that I've read, seen, heard is that when you mentioned you're looking for folks who are looking forward and following trends, some of the most successful funds are the ones that have a unique lens of the view of the world, or they have a contrarian view. So like, because you want to follow trends, but you also have to be unique. Like, can you be both at the same time? Can you break that down?
Yeah, I mean, actually, following trends is bad. Being on trend and actually being a little bit ahead of trend is really where you want to be. And there's always the difference between being sort of leading edge and bleeding edge. And you don't want to be so far ahead that within the time frames in which venture works, it doesn't work. So if you're out looking at something that's 20 years away from being commercializable, you're probably a little far ahead. But looking ahead at within the time frame of a venture fund, what's going to be growing, where can real value be added? That's the key, and the great funds do that.
So they're sort of they're aware, essentially. Great fund managers are aware. They're looking around, they're seeing where the world's going, and they're positioning themselves essentially.
Yeah, I mean they're tracking not only technology growth but markets, and where you get bleeding edge is where you get a little too focused on technology growth without the ability or desire of markets to absorb that technology. So it really is a balancing of those two.
Got it. Makes perfect sense. Well, we're going to get into in our conversation, we're going to get into all kinds of tactics, the do's, the don'ts, the mistakes that fund managers, founders, et cetera, make. But I thought before we get to that, I heard you on a previous podcast and you were excellent and you covered all kinds of these sort of things that we're going to get into. But first, I want people to actually get to know like Chris a little bit more. I know that you've spent your life in Michigan. It's a really unique startup VC ecosystem. I think about the universities you have there. I think about the people in the Midwest are just different in the best way possible. Can you sort of rewind us of like, so you started at PwC, but can you take us from PwC and just take us through the journey real quick of your story?
Sure. Yeah, so I was at PwC, went back to law school, became an attorney, moved on to a law firm, became a partner in a big Detroit law firm, Dickinson Wright. Great time in my life. But I was really sort of yearning to do something entrepreneurial and happened to be very fortunate that a friend I had worked with at PwC back in the day, he went on to become the president of Gateway, the old computer company. And he moved back to Michigan, wanted to start a venture fund. And I came in while I was still at the law firm to help him put it together. His name is Rick Snyder, and really a great mentor for me and got me into venture capital. I mean, literally, when I first was deciding whether to get into venture capital, at one point I had to go to a library and get a book to read what venture capital was. So it was very nascent. This is 1999. So really early in the days, particularly in the Midwest for venture capital. But I was drawn to it. I was drawn to the potential of venture capital to not only seed new companies, but really change industries and change uh, geographies. And we were very focused on Michigan and how could we help transform Michigan from a pretty traditional manufacturing state into a state with broader areas of expertise, particularly, as you mentioned, Shane, given we were a state filled with great research universities. In fact, my office is in Ann Arbor next to the University of Michigan, which is the largest public research university in the country, 2 billion a year in research. So a lot of opportunity to make changes. So I got into venture capital. We were fortunate. We had a couple good funds that we worked on together. And then, interestingly, my partner Rick decided he wanted to move on to something else. So he ran for governor of Michigan and won. So he was the governor. But I wanted to do something different in venture capital. And that's when the opportunity for Renaissance came. So it was a bit of a winding path to get there. But the idea behind Renaissance was living in an area that was underserved for venture capital, but had great potential. The question is, how can you develop a venture capital ecosystem as somebody who's managing money? So in doing that, the way we structured Renaissance was to be like no fund that had previously existed. First of all, in order to get what I would say more shots on goal of venture in the state, rather than become a regular venture fund as I was in my prior fund, we became a fund of funds. So what we do is we invest in top venture capital funds around the country under the condition that they will come and look at opportunities in Michigan. So in my first fund, which was $45 million, we invested in 10 funds around the country, which meant now we had 10 funds looking at startups in Michigan, as opposed to if we had started a venture capital fund, we would have been one fund looking at more opportunity. But we did a couple other things that were quite unique. The second thing is we're investing in funds around the country, knowing they're not going to be walking the halls at the universities here or really able to dig into the communities to find the best startups. So we do that. We work with all the universities in the regions, the accelerators, the angel funds, and we suss out what are the most promising startups happening here. And then we gather that information and push that out to funds in which we invest. And in fact, to other funds in our network. Getting a little ahead, but we run an event twice a year called UnDemo Day. It's the largest event of its kind in the Midwest. And what we do is we find all the best startup companies in Michigan, and we essentially we take over Ford Field with Alliance Play, and we run a fantasy draft for meetings. We go to our network of VCs, and we'll have 200 plus startups, 200 plus VCs, and the VCs make their draft choices in advance of who they want to meet with. And then we set up hundreds and hundreds of one-on-one meetings, sitting right there in Ford Field at tables. The goal being to get these funds that are not typically spending time in Michigan to see what's going on here and to get them to ultimately invest. And here we are 17 years later almost, and we've been able to help attract about $3 billion of capital into Michigan startups through our work. So that's the second thing, is connecting those funds with Michigan startups. The third element, which was truly unique, was we engaged as our investors a number of Fortune 1000 and large private companies, asking them to not only invest in us, but to look to become customers of startups that come out of this network. So when we invest in a fund, we are bringing them deal flow from Michigan, and we're bringing them customers from Michigan. Nobody in the fund of funds world had ever done that before. So that was kind of the unique things that we brought with Renaissance. And again, here we are 17 years later and 5 funds later, still going strong.
And like you said, it wasn't linear. There was a series of ups, downs, different directions. And it's incredible what you've built and are building and going to build. And a lot of the people listening today, Chris, are maybe young fund managers, young entrepreneurs, startup founders, VCs all over the country, all over the world, and they're charting their path. And if you could speak to them and maybe share what you know now that you wish you had known when you were starting your VC journey, your fund of funds, what would you tell them?
Boy, there's a lot of lessons. I would say my time as a VC really helped set me up for what I'm doing now, because I learned so many lessons, in many cases the hard way, as a VC. A few of the bigger lessons, I think, were number one, to really trust my instincts. Um, there's, especially when things get heated in venture capital, there's, I guess, a lot of clubbiness. And folks, you see a deal where 4 or 5 or 6 venture firms are getting in. And I would argue some of them not really with high conviction. And high conviction is one of the biggest things you have to have as a venture fund. So early on when I was in venture, I would say we looked at deals, and I looked at deals and probably had, because of my unusual background, maybe a little bit of imposter syndrome, and seeing deals, seeing other firms jump into deals, and really questioning, wow, should I get in that deal, even though that deal isn't singing to me, even though I don't necessarily believe in it? Should I get in it? And the big lesson was, no, I shouldn't get in that. The thing I always tell early stage VCs is, if what I learned was, if something didn't make sense to me, it probably because it doesn't make sense. It isn't necessarily that there's something wrong with me that I'm not getting it. And even if I'm not getting it and there's something there, I shouldn't be investing in it because I'm not going to add value if I don't get it. That was a really big lesson. Second lesson is, unfortunately, deals are not going to make it. And the self-awareness and the objectiveness of saying at a certain point, like, this deal isn't doing what I thought it was going to do, it's time to stop. That's a really tough thing. And I will say, I saw that a lot in the Midwest. Most of us are pretty competitive people. And the thought of losing a deal, that we invested in and we've got a couple $1 million in, it's tough. But it's better to lose that deal than to keep putting more money on a deal that's not going to make it. That was a really big lesson. And it's a way that I measure, now that I'm on the other side and investing in funds, it's a way that I measure venture funds, is their ability to end deals that just aren't working. Do it humanely, but not, not make the coda last 3 years.
Yeah, isn't it interesting? Because you don't want to quit. You don't want to be a quitter, but at the same time, sometimes not investing is actually the best thing for the person who's asking for the investment.
Absolutely. Absolutely. And again, you got to do it humanely. You got to try and help. There have been times we were shutting down deals. We were actually working to help the people there find other spots somewhere else. But, it was the right thing in those cases. And I can't think of many situations where we ended it too soon. I can think of a lot of cases where we ended it too late.
100%. And before we move into the actual like deal mechanics and evaluations and the things we're talking about, one other thing that just about you, Chris, that I'm so curious about, you mentioned competitiveness. I get the sense that one thing that's important to you is like community and partnership and building something with someone. You mentioned your partner who went on to be governor. Why, I guess, what are what are your values as a fund as an investor today? Like what what are your core values?
Yeah, I mean, the core values are, I mean, we are big believers in this concept that if you're looking just from a return standpoint, the best returns can be obtained by going where the money isn't, not where the money is, right? And there are great opportunities in places like Detroit or St. Louis or Cleveland, or you mentioned you spent time in Columbus. Really great places with strong technologies that are simply underserved. There aren't 10 VCs fighting for every deal. So there are great opportunities from a financial return standpoint. So big believer in that. Big believer in people working together and making the pie bigger as opposed to fighting over a limited sized pie. And so the idea, even with Renaissance as we do it, we work with, when we're putting on non-demo day, we work with 40 organizations, all of whom are working with startups. They're trying to grow those startups, and they're not putting their arms around and say, we don't want Renaissance to have any part of that. And we're not saying we've got this special event, we want to hand pick who gets to participate. The idea is to open it up, let the market work. The best companies are going to get the most meetings at UnDemo Day. It's just the fact. And they're going to get investments. And I'm a big believer that by just taking the imperfections out of the market, everybody wins and we all do better. So those are core to us. And there's just a belief that runs through our whole organization. And I'm blessed to work with a team that really believes this, that venture capital, while not broken, does need tweaking in order to accomplish these goals of democratization.
What kind of tweaking exactly?
It really is getting people connected that aren't connected by their natural network. So, you've got over 50% of the capital is in one state, and they are not naturally connected through their networks to other parts of the country. And so that's an imperfection in the market. And our goal is to help address that imperfection and get, a startup company running by an African American woman in Detroit connected with a VC sitting in Palo Alto who would never meet her and never see the amazing things that she's doing.
So you're essentially UnDemo Day is actually unlocking opportunities for people to connect that would probably never ever cross paths before.
That's right. And by the way, again, the goal is simply to let the market work. There's going to be companies here in Michigan or in Ohio that just aren't, they're just not ready for venture capital. Just let the marketplace work. Just get people in a room together and see what happens. And again, going through 17 years, we've got $3 billion that have come in, and a lot of that wouldn't have happened without helping the marketplace out.
That's so true. It's so funny. I remember going to my first YC demo day several years ago, and the reality is like they just created space, had some microphones, and then let the market work. Sometimes one of the best things that you can do when it comes to community building is like get out of the way and also stop making it about you, make it about them. And people will connect. And I can already see it when you're describing it on demo day of the folks sitting at the tables and people lining up to meet other founders and other investors. I think that that's wonderful. And I can't it's probably hard. ROI in this sort of situation is probably easy to calculate, X investments of X much, but like how about the relationship ROI of like the friendships, you can't put a price on that. And I think at the end of the day, that's what people will remember about UnDemo Day. Long after we're gone, they'll remember the people that they met. And I'm sure you've seen that firsthand. I gotta imagine.
Oh, sure. The day will ultimately during the day, we probably have about 700 people total there. And those that aren't in meetings are often another spot, just talking with people they would never have otherwise met, learning stuff, founders learning from investors, but founders also learning from founders. And so, yeah, it is a destination, not just for the one-on-one meetings.
Can we talk about founders for a second? The
Yeah.
2025 is yeah, it's 2025. It's such an interesting year. What trends are you seeing with founders right now? Who's a great founder you've met recently? What are some red flags you've seen? Any trends you've seen for founders that they should know? It'd be really awesome to hear.
Yeah. So it's an interesting time for founders, as you said. We're beginning to see the ability for a founder to create, particularly a tech company, at, at perhaps a fraction of what it would cost even a couple of years ago. And what does that open up? It opens up the ability for founders to reach inflection points quicker. But again, we talked about this earlier, they've got to be thinking ahead. They've got to be thinking in this new way of building their company. I think what we're going to see these founders have an opportunity to do is, not everything's going to be a unicorn, and it doesn't have to be, and it shouldn't be. There are going to be some great companies formed that are quite capital efficient, and these founders are going to have opportunities to get a company to market quicker, get customer traction quicker, and then ultimately, if they want to exit quicker, selling a company for 100 to 200 million, but everybody doing really well and then going on to the next. And so they've got an opportunity, right? We're in a period where founders start companies and it's 10 years before, an exit happens. And you get a lot of fatigue around that. And that has hurt the whole industry, these long periods. So founders have a chance now to address that. And AI, which I know you talk a lot about, is playing a big role in that. Um, Founders, the better founders we see though are not only smart and not only have a vision, but they're also listeners and observers. Um, I'm sure you see this, Shane. You may have founded your company 2 years ago. Um, and if you haven't pivoted since then in some elements, it's probably because you're stubborn, because things have changed so much even in that 2 years. You know, and there's a balance, right? You have to have high conviction as a founder, but you also have to be listening and observing and adjusting to what you see is going on in the market. The biggest challenges we see are not technology that doesn't work. It is technology for which there isn't a market.
Right? Technology that's being built that doesn't solve a problem ultimately that someone will pay to fix or have yeah, 100%. There's so much, I, keeping things simple is powerful. Building something that people want, building something that people need, and something that they'll buy is huge. Obviously, there are hacks and tips and things that you can do to accelerate it. I've heard whispers of a unicorn being built by two founders, for example. They predict that this will happen at some point because of the use of AI agents, things like that. So that's sort of aligned with what you're seeing. Um, you mentioned good founders. Can you tell me more about beyond just listening and understanding? Can you describe founders who you've come across that just over the last couple of years just really blew you away? What were they like?
Yeah, increasingly, the better founders are coming into their startup with deep knowledge of an industry. So a tech founder who's just a tech founder and it's like, okay, I invented this. Now I'm going to apply it to this vertical and this vertical and this vertical. I think that's going to be increasingly difficult in part because with the growth of AI and AI tools, the tech part of every company is going to be less of a moat than it was. What truly the moat is understanding an industry, how it works, workflows, how they buy, and all that. So I'm getting more and more excited about founders, even if they don't have deep technical knowledge. It, I'm getting more excited about founders that have deep industry knowledge because I think the tech is in large part going to become easier for them. If they don't understand the industry, I think the road's going to be tough. The days of tech companies being able to come into an industry and make the industry bend to fit what the tech company wants them to do, I think those are going away. It's going to be companies that are even more attuned to how this industry works, especially if they want to get in there. Time to market's going to be is going to be more important. If you want to have time to market, got to understand the industry and make it easier for the industry to adapt to you. Excuse me. Yeah, easier for the industry to adapt to your technology, not force them to contort themselves to adapt to what your technology looks
So it's funny in this world of AI and information being so much more accessible, the deep expertise is going to be, yeah, it's that human connection. It's that expertise that's going to carry companies forward. How about let's jump to the fund? Let's jump to the fund side, the managing partner, the general partner side. Um, it's super competitive. Always, always seems to be for raising a fund. Some funds raise and do really well, some don't. What can a fund manager be doing specifically right now to position themselves for having a successful fundraise?
boy, it's almost unfairly difficult for a lot of funds right now. Um, we see 5 to 7 funds every week, and I would say the percentage of funds we see that are hitting their target, 10%, something like that. So it's really tough. It's a tough environment. And for the reasons we talked about with long holds, LPs are engorged with venture capital from several years ago that just is not, they're not getting distributions from. So there's an overall market challenge. And the competition, uh, GP to GP to raise is super tough. So the first question is, how do you look different? So let's say we look at 300 funds this year. How do you look different than the other 299, knowing that even a fund like ours that is, we only do venture, we might do 1 or 2 new relationships a year. How do you become that 1 or 2? And one is to not sound like everybody else. Two is, going back to what I said, what are you really good at, and that's different than everybody else? You know, so many funds come in, and it's like, yes, we're a fund, and we're gonna be a tech fund. We're gonna do AI. It just sounds so generic. A fund that comes in and says, we are experts at this, and we are going to be narrowly focused at this. And here's how we're really good. We've got these commercial relationships that we're going to bring, to our portfolio companies, and a story that really shows, like, in a world that I think is going to become more specialized, smaller funds are going to need to be more specialized for the reasons I talked about, understanding networks, understanding industries, and all that. I think a fund that does that, communicates that effectively, as opposed to we're a general tech fund. I think those funds are going to do better. Um, it's odd. Um, Smaller funds need to be more specialized for the reasons I said. I think specialized smaller funds are going to be the best performing funds, period. But we're at a time when it just came out in PitchBook, 75% of the capital that was invested in funds in the first half of the year went to like 25 funds, and and then 200 and something funds shared the other part. So you've got these mega funds, which, in order to kind of justify the amount they've raised, they really have to become more generalists.
True.
So at a time when I think the highest value is going to be becoming specialized, you've got the vast majority of money going to funds that are going to be more generalists, are going to be multi-asset class and all that. So 75% are going to what I would call money managers. The remaining 25% is really what is the more traditional venture. Um, I think that 25% has the opportunity to outperform so that when we look back 5 years from now, we're going to say, that $70 million fund was the winner. Uh, so this is a little bit counter. I'm speaking something that's counter to where the market seems to be going, but I'm pretty confident in what we think that these specialized funds are going to be where the money's made. And by the way, a $20 billion fund can't sell a company at $200 million. It just can't. They have to build unicorns. And that's a difficult way to live. We think these smaller funds that are getting high ownership percentage, and are really focused on sort of narrower areas, particularly in vertical AI, are going to be the ones that can sell companies at 200 million and do really, really well and beat the market.
100%. And isn't it interesting how it's sort of connected to the founder observation you mentioned about deep expertise?
Yeah,
Fascinating, right? So it's
right,
like it's a
right.
macro trend, but then when we zoom in and we're talking founder, fund manager, it's so interesting. I'm seeing I'm hearing similar things at New York Tech Week. There was an investor speaking about how he was saying that some of these larger companies, some might just disappear because the speed of AI, the speed of technology is faster now. So they're either going to
Yeah,
disappear or they're going to acquire, like you said, the $100-200 million acquisitions, which is also in line with what you just said. And then also
yeah,
just reflecting the final reflection on what you shared is like these huge funds, you're right, they have to have these huge wins which are getting increasingly difficult. So it's almost like to have even a decent return they have to have several huge wins, which is like, just, I don't know if you're really setting yourself up for success long term. Short term it looks great, because you raised X amount and that's wonderful, but long
yeah,
term it might be a
yeah.
totally different story. So in 2030 we might, yeah, it's going to be fascinating. What a wise observation. So with that said, there are so many niches. Like what have been some interesting niches that you've seen pop up the last couple years?
It's everything from, I mean, obviously there's a lot of fintech. There is a lot of mobility. You go industry management. We're big investors in biotech, um, and AI is an area where AI is something that's really going to play a lot in that area. You just go industry by industry through it, and you think of the intersection of that and AI. And AI is going to touch all of it. And you're either going to see existing players adopt it, as you said, largely through acquisition, or you're going to see new players come up and supplant the existing uh, the existing leaders in those fields. And so uh, this is a fascinating time to be in venture. We talk about, in some ways, it's a very difficult time because so many funds are unable to raise. Um, but it is a fascinating time that's going to create a lot of really interesting results. And we're not going to even 10 years from now is going to look so different than right now.
I so agree. And I'm also just building on what you're saying about the niches, defense as well, national security. I mean, it's like these are being talked a lot about right now. It's yeah, and it's going to come and go, kind of like back full circle to when we were talking about your story of it's going to be a series of winding sort of directions.
Yeah,
And
yeah.
that I'm glad that you're optimistic. It sounds like you're an optimist about the VC landscape.
Yes, I think there will be, we show this slide sometimes at our meetings. The spread between the top decile fund and the bottom decile fund is 38% a year. Pretty big. That's not going to go down. If anything, that's going to increase. I am optimistic. I think there's going to be a lot of, there'll be a lot of funds that don't do well for the reasons we discussed. But I do think venture capital is going to drive some incredible innovation, and we're just going to see a lot of success come out of it too.
Agreed. Speaking of success, just a final question as we wrap up.
Yeah.
When you know think about everything you've done up until this point, law, accounting, finance, VC, building communities, hosting events, leading teams, like what do you really want to be known as or for?
Um, that's a great question. I think it is, hopefully, when this is all done, it'll be known. I'd be looked at somebody who really helped founders realize their dreams, and change the world in a positive way. People who had the dream of changing the world had the, because of work we did, had the ability to change the world. That's what. And again, I think the way markets work, if you do that, everybody's going to do fine.
I agree because it goes back to what founders are doing. It's an awesome dream. I have 100% confidence that you're already doing it, but you're going to continue to do it. And that's our show today. You've been listening to the show. I just final thought. Maybe take the next 5 minutes of what Chris shared and write down some notes, or share this with someone who you care about or a teammate, or maybe even just an adjacent idea to what Chris was talking about with founders and fund managers. There's so much gold in there, and apply it to your life, apply it to your deals. I'm Shane, and we'll catch you in the next episode.